value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of InkResearch.ca. He invented the Canadian Insider Index, which is used by the Horizons Canadian Insider Index ETF, a 2017 and 2018 fund data, Fund Grade A Plus award winner. His website, CanadianInsider.com. Welcome back to the show, Ted, and best of the season.
Well, best of the season to you and all your listeners, and thank you everyone for tuning in.
And Ted, for people who were part of your Canadian Insider Index, since March, things have gone gangbusters. How well has it gone, and why?
Since inflation expectations bottomed at the end of, towards the end of March, stocks shortly followed, and on March 23rd was more or less the bottom here in the pandemic cycle. And since that day, we've heard a lot about the NASDAQ, and the tech stocks. But the Canadian Insider Index, which tracks mid-cap Canadian stocks and is very inflation sensitive, because we track stocks that insiders like, and insiders like stocks where their revenue is going up, or expected revenue is going up, and inflation kind of helps that. It's just more than doubled off the March 23rd bottom, and that compares to the TSX Composite, which is up about, this is as of December 15th, mid-December, 56%. So, the Canadian Insider Index, these insider stocks have done quite well. There's an ETF that tracks it, the Horizons Canadian Insider Index ETF, which we are eligible to get a royalty fee on. It's doubled as well. So, it's been quite the recovery out of the lows from March, and it's thanks to rising inflation expectations. For the most part, if had governments not moved in and supported the economy and revived those kind of inflationary spirits, it could have been a completely different story. And, this gets back to our G versus D framework. G economy, government-led inflation; D economy, deflation, depression. Unfortunately, we only saw those kind of two base case scenarios, one or the other. There was no Goldilocks. Everything is going to be fine right out of this pandemic hit because of the amount of debt that was facing the world. So, we thought it was going to be a G or a D, and so far, Jim, it's been a G economy slam dunk. Basically home run here. So, what's in store for 2021 is something else. But certainly at this point, it surprised even us how strongly inflation expectations have come back. In fact, they've been hitting 52-week highs. When you look at break-even yields in Treasury bonds, that is the implied inflation rate. You get that by basically looking at the difference between the nominal yield, the yield that's quoted in the newspaper, and what the real yields are. That you can find also in the market, and you can get the implied inflation rate. And that's at one point earlier this month, just a few days ago. I haven't checked it today. The looking out sort of 5 years and 5 years beyond that, the expected inflation rate was almost at the Fed's target of 2%. And that's come a long way from where we were in March. So the progress has been remarkable on that front. And so certain assets have done very well under that, and other assets, not as well. Most assets have gone up. but it's certainly been a divergence between the Canadian Insider Index and the broad Canadian market. And, provided we continue to get government support in the economy, and that's not a given out of the United States, but we are going to, I think we're going to get a package, short-term package anyways, but, just looking beyond sort of the next few months. But certainly in the near term, it's looking like the G economy is winning, and being geared towards inflationary assets has been the winning approach for the past 9 months. And at this point, we expect that will continue. But we have our eye on what's happening in the U.S. In U.S. politics. That's going to matter. It'd be nice if we could avoid politics. Certainly, discussing our preferences here on HoweStreet.com, but we do have to play the cards we are dealt with in politics, and we have some big, hands that are about to be shown out of the U.S. Coming up in January, and I'm talking specifically about those Senate runoff elections. That's going to determine, I think, a lot in terms of what we can expect out of Washington for the next few years. But in the very short term, over the next few weeks, over the next few months, we've got this inflationary impulse that's taken hold that should help inflation-oriented assets for the time being.
What has made the Canadian Insider Index so powerful since March?
Well, it has been those rising inflation expectations. We found that inflation expectations kind of peaked way back in the spring of 2018, and the index started to stumble then against other assets. So, this isn't a one-way street, because if you have governments that decide they're going to balance the budget at the same time that they're going to provide Wall Street with all sorts of free money and goodies to inflate the assets, of Wall Street, the Wall Street favorites of the day, whether it's real estate or whatever is in vogue. That's not necessarily going to translate into consumer price inflation. But when you've got governments actually helping out individuals and households directly with payments, support. We've seen that in Canada. We're going to probably see that a bit more in the United States. So there's talk of, I think, $600 checks going out. And you see that kind of support, that's pro-inflationary, as opposed to just giving checks to Wall Street, which is what we had for most of, I would say, the last decade under the Obama administration with the Fed, and that was because, in part, Congress didn't want to undertake any direct support, for the most part, new support to the taxpayers, to the households, and then Trump came along and he brought in some stimulus both for corporations and for households. That helped. That was late in the decade, but for the most part of the decade, there was this sort of gridlock in Washington. If we go back to that gridlock in Washington, Jim, I'd be, we're back to a different ball game again. We're back to, is this just going to be a market for the wealthy, those with assets, and households are going to be left behind? For the Canadian Insider Index to continue to do well, you've got to see Main Street doing well, and on a relative basis. And when I mean that, in terms of support. So obviously Main Street's taken a hit during the pandemic, but they had government support. The old playbook, if we had gone to the 2009 playbook, the Great Financial Crisis playbook, the average household, the average worker would have been left behind. All the money would have gone to Wall Street, and you would have had a similar result. And and we'd be looking at a different scenario. But no, we had direct help to small business and households. One can debate whether it was enough or whether it was too much. Again, we want to deal with the cards that were dealt. And now it looks like we're going to get a bit more stimulus out of Washington, so that should help in the short term. But we'll see what happens after those Senate runoff elections in Georgia on January 5th, and the longer term outlook for policy out of Washington, whether they're going to continue to support households or whether that all comes to an end in a few months. So we'll be keeping our eyes on that in the new year.
We'll have more with Ted Dixon right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Ted Dixon. Ted, progressive energy is grabbing attention. What is that, and what's it doing?
Well, that's a new theme we just introduced last week to our readers. You can actually go on to Canadian Insider and look at our Insight newsletter from the Market Center, and we've got in our December 12th free newsletter heading into 2021 with progressive energy. Well, what does that represent? Well, it means progressive steps towards a clean energy economy. Now, the word progressive means essentially step by step, getting there. This isn't going to be an overnight move to, get rid of, carbon fuel, fossil fuels from the economy. But we're heading under the Biden administration. We're going to head more and more towards meeting emissions targets out of the U.S. There's going to be a greater focus on that. But even without the U.S., there was already a major movement just in the last few months by other economies to make a commitment to reducing greenhouse gas emissions down the road, but not that far down the road. For example, the Japanese government, the Suga government out of Tokyo has said they're going to enshrine in law that they're going to be net zero carbon emitters by 2050. That followed a pledge by China in October that it was going to be net zero by 2060. Then I believe it was last week, the EU passed a budget where they're going to accelerate their goals to be, they won't be net zero by 2030, but they're hoping to be, I believe, they're going to accelerate their emissions goal target to 55% reduction from 40. It was 40, so I believe they're going to try and reduce it by 55%. In 10 years. So you're going to see a massive focus by industry and governments to promote technologies, business practices, a whole range of ways that we live and doing business that progressively get us towards net zero. And this is going to open up a large, broad set of investing opportunities, and it's going to span a wide range of industries. And yes, it's going to include the oil patch, because there are going to be companies that take it very seriously and bring in programs to reduce their emissions in their drilling and in their production. And you're going to have a renewed focus probably on nuclear power. In the Biden energy plan, they've got a commitment towards getting more research into small nuclear reactors. And believe it or not, Canada is one of the leaders in that technology. And people have started to sniff this out, and lo and behold, we've seen uranium stocks come to life. And in fact, as we point out in the newsletter, Cameco, this is as of the weekend, I haven't checked the tape today, but Cameco has outperformed Facebook year to date. Talk about a shocker. Who would have predicted that, at Labor Day, that Cameco was going to be outperforming Facebook in 2020? And part of that, I think, is a recognition that the world is getting serious about reducing emissions. And, you can't rule out nuclear power as part of that, as part of the solution. So, we've seen many false dawns in the uranium sector. We'll see if this one is different, but certainly it's caught our attention, and that's part of the progressive energy theme. So, you've also got rare earth mining that I think will get some attention as countries look to build up their electric vehicle capacity that isn't so dependent on China, which is the big processor of those rare minerals. So there is a wide range of opportunity coming in, and it's quite exciting. So, we've been going through some tough times here at COVID-19, but looking forward to the next few years in terms of the wide range of investing opportunities that are going to be developing in the progressive energy area, and other areas as well. But that's certainly a new one that I think has emerged, and it seems to have been a bit of a kickstart here over the last few months, and with the U.S. going back in the Paris Climate Agreement in January, if Joe Biden follows through on his promise to join it the first day or two of taking office, then we'll be off to the races.
On the subject of rare earths, I believe Saskatoon is going to be the hub for Canadian development of rare earths. And you might remember when President Trump was proposing to buy Greenland. Well, Greenland also has a lot of rare earths, but Canada has the most deposits of rare earths. And if you have a cell phone, which is pretty well every human on the planet now, something like 43 different rare earths go into it.
Well, that's right. And in our Inc. chat forum, which is a forum for our subscribers, we've been talking about a few junior miners that are in that area. So it is, there aren't a lot of companies that are in that area, but there are some. And so it is opening up opportunity for junior miners. We often think of junior mining as gold mining in Canada, but there's a lot of industrial miners. There's a lot of battery metal miners, a lot of nickel miners. So this is going to really broaden the junior mining opportunity set here in Canada. So that's quite exciting.
We'll have more with Ted Dixon right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, there's a scramble to know your customer technology. What's that story?
Well, something caught my eye in my inbox this week. It was from a website called CoinDesk. They track cryptocurrencies and blockchains, and they brought out this issue regarding the recent controversy at Pornhub, which is a large porn site that's run out of Montreal, I believe. And by the way, my research here is limited to this article I read in CoinDesk. So it's a very good outfit, CoinDesk, in terms of their breadth of coverage on cryptocurrencies. So I thought it was interesting that they turned their attention to what was going on at Pornhub. And for those who aren't following it, the New York Times wrote a very scathing investigative report on that site involving sexual exploitation. Now, I'm not going to get into that article. There's plenty on the internet if your users aren't familiar with what was alleged there, can find that. But so this has put the company, I believe, in crisis mode, as it probably should, and for a couple of reasons. One is that Visa and MasterCard apparently have cut them off. So, that's an interesting development in that, Visa and MasterCard taking the initiative. We could probably have a whole discussion about the implications of that. But another element to it was the company, and this was what was in the focus of this CoinDesk article, is scrambling to develop a know your customer technology, so that, I guess, their business model is not all that different from Facebook in the sense that they rely on their users to provide content and upload material. So the part of the I believe the New York Times piece was some of this material that was being uploaded was highly questionable, if not highly questionable. I'll leave it at that. And so the company is faced now with this massive crisis because their whole, I don't know if it's their whole business model, but a good chunk of their business model relies on these uploads. But if somebody uploads something illegal, how do you, if you can't track the person who did it, or if they can't flag the person as being a bad actor, it leaves them susceptible to this kind of criticism that's been leveled at them. So they're scrambling to bring in a new know your user technology. So I guess the idea is if you want to upload something, they're going to know who you are. Well, that's all very good, but they've got a very difficult needle to thread here because how comfortable are their users going to feel about wanting to disclose who they are to this website? Okay, so who cares? Well, what will be interesting is how this company deals with it, because if they can deal with it, if they can find a solution, this has very broad implications across many businesses. Because if this if a porn site can crack the know your customer technology and implement it in a way that works, and there's no guarantee that they'll be able to do it, but if they are, well, what about social media platforms? What about, there'll be pressure on companies like Facebook to adopt similar technologies because, if somebody posts something that's against the law, there'll be pressure on them to be able to identify their customer. So this is just really throws a spotlight, I think, on where we're kind of headed in the know your customer realm. I think it's going to be a theme to watch in the next 1 or 2 years. It's going to have broad implications. The Bank of Canada actually wrote about a similar this topic last summer in terms of cryptocurrencies and decentralized finance, in that they're thinking very seriously, very hard about how do you implement a know your customer type of technology that's secure, that the URI would feel confident about giving an entity this information, right? That it's not going to be shared all over the place, but that the financial institution or the company that has access to that information can provide it to authorities under the right under the right warrants or the right process, if that's required. So a very interesting development that's evolving out of a crisis in this firm, and that how they handle the know your client situation will be a case a marvelous case study in a very tricky balancing act. But it'll be one that if they pull it off, there'll be pressure on other businesses to follow similar practices. So I'll be keeping my eye on my CoinDesk inbox mail feed to see how this develops over the next year or two.
Ted, thank you so much for chatting with us.
Jim, thanks for having me back.
Best of the season to you and your family and all of your cohorts.
Well, thank you very much, and to you, your family, and all the listeners out there.
If you have any questions for Ted or any of our other guests, you can send them to info@HowStreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.